Welcome to the latest Motley Fool scoreboard. I'm ONON and we've got longtime fools Lou Whiteman and Matt Frankel giving a 1 to 10 rating to a top 200 stock in the primary hidden gems database. It's one I've been hemming and hawing on forever. It's ON Holding, ticker symbol ONON. We'll rate the strength of ON's business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Matt's at a 9, Lou, you're at an 8.
Yeah, so I should say current day business is probably a 10. All right, ON is a fantastic company on a fantastic roll. They design and market premium high-performance athletic footwear and apparel. They have their distinctive kind of, the patented cloud tech cushioning technology. These are shoes that people love. The consumer brand, it's great. And it tends to work until it doesn't. But wow, this one has worked, at least for now. 60% plus gross margins, demand that has been strong enough to largely offset tariff concerns. It's currently a 10, but again, I do wonder. We know these premium athletic brands can be notoriously fickle. This is a hyper-competitive space. So I'm at an 8 with an asterisk. I think it goes higher or lower from here. I just don't know where.
Yeah, I'll split 8, lose 8 and 10 and give it a 9 here. So the company, they've done a great job of disrupting an industry that has been dominated by massive billion-dollar companies for a long time. 30% plus annual revenue growth. Lou mentioned their excellent margins. The customer base it skews affluent, which is good resilience in tough times, which is kind of very important in the apparel space. And great technical innovation. I mean, I have a pair of their shoes. I wear it to the gym every morning. So I love the product. I love what they're doing. But like Lou said, these fashion tends to have limits, and they have to stay on their toes to maintain their edge.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Lower scores here. Matt's at a 6, Lou, you're at a 7.
Yeah, with the last person to run ON Holdings, please turn out the light on the way out. It has been a mess of late. The good news is everyone involved has really good pedigrees. Co-CEOs Martin Hoffman and Mark Maurer ran this for a while. Then Maurer stepped away last year. Hoffman departed in May, so co-founders David Allerman and Casper Capetti, I think it is, have stepped in. Another co-founder, Olivier Bernard, is on the board. There's a lot of good people here, but there's also a lot of chaos. I don't really have any concerns, but again, the finicky nature of this business, sometimes the people that build the next big thing have trouble sustaining it. So no real complaints, but I'm only at a 7 just because I don't know. I don't know what to think right now.
Yeah, I'm at a 6. For one, Martin Hoffman is largely credited as being the one who took this company into its big growth phase. And two, I'm just not a fan of the co-CEO structure. You have to have two leaders agree on everything. Maybe this is just soreness from my Boston Omaha experience, which had co-CEOs. But every situation with co-CEOs, there have been kind of issues with it that would have been avoided if there was one leader in charge. So that's why I'm at a 6. The leadership structure does concern me.
Apologies in advance when I mess up the management slide on this one. For financials, a 10 is a fortress, a 1 is a yikes. Both of you have 8s, Lou.
Yeah, so, they just finished another strong quarter. Sales up 14%. Gross profit margin remains in the 60s, again, even with the tariff issues. They disappointed the market a bit by keeping the outlook unchanged, but that could just be conservative with all the management turmoil and all that, so I'm not really worried about that. Balance sheet is fine. Again, the question, the financials are fine. The question is sustainability. The present is wonderful.
Yeah, also at an 8, not a lot to dislike here. A debt-free balance sheet, which for companies it competes with, that's kind of rare. 60% plus gross margins. Their net income's growing fast. Like I said, it's a matter of whether they can sustain it, but for now there's not a lot to dislike from a financial perspective.
Let's talk valuation then, Matt. How well will ON stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
So you might think I'm going to go higher than I am, but I said 10 to 15% total returns with a safety score of 6. And if you watched our episode on Moog yesterday, it was valuation is my concern. Same thing here. Valuation here prices in continued pretty much what I would call near perfect results. Discretionary spending could drop in a downturn. Their customer base should be more resilient than most, but not perfect. The CEO situation adds some risk, but it's a strong business with a lot to like. And in addition to all that, fashion is finicky.
So I think at some point this won't work as well as it does now. I have no idea when that point is, and I'm not going to try and predict it. It can last a lot longer than I think. I'm at a 10 to 15, kind of splitting the difference. I neither assume this can't last or assume it will. So I have it, mildly beating the market. Safety is a 3 because, yeah, they're trading at 40 times earnings in a fickle market. Did I mention that yet? Probably too risky for me. But then again, I don't like retail because I have a very hard time seeing trends coming.
Well, thank you to both Lou and to Matt. They've given On Holding a good overall score of 7.0 out of 10. For Toppets, Lou doesn't have one because, as you could imagine, he's kind of avoiding consumer goods in general. Matt thinks Nike might be a better value and thinks it's making some smart moves. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Markel. Till then, Fool on.
They're finally taking some of the visible parts of their business back from Under Armour. Like a lot of colleges are switching back to Nike, and things seem to be just generally, the cool factor seems to be trending in their direction, which it wasn't for a long time.